Welcome to the Beyond Stocks podcast by Splint Invest. I'm joined today by Mario, Head of Investments at Splint Invest. Mario, nice that you took the time, thanks. Now, financial markets at the current time do not really face an easy time. We quite have some challenges on the markets. Can you maybe elaborate on that?
Yes, first of all, hi Lars, and hi to the audience. Thanks a lot for having me here today. It's a crazy time looking at the markets. It's super volatile. It all started somewhere in 2020 when we had the pandemic, which was kind of bringing disturbances within the stocks market, especially. After that, it continued with the Ukraine war, kind of having everything that an impact onto the whole fiscal policy of the national bank. So we're currently fighting inflation at the same time. They should as well fight recession, and so both of that is a bit a deadly mix. And so it was unpredictable during the last 2 years, and it will definitely stay unpredictable as well for the future.
Okay, interesting. So we have multiple points here. So financial markets were hit by COVID, then by the Ukraine war, by monetary policy. So this, of course, it didn't really help the retail investors with their challenges of seeking stable returns, some stability in their portfolios. Now we have something new on the horizon that is more accessible to retail investors, which is alternative investments. But before we get into the nitty-gritty of alternative investments, maybe quickly introduce yourself to the audience, tell them where you come from, what your background is.
Yeah, happy to do that. Of course, it's not that exciting on what I did in the past. So I'm a so-called natural born auditor. So I was working for over 10 years in a big four company, doing audits, and that in the asset management space. So I was auditing fund management companies, asset managers, distributors as well, custodians, so kind of the full range within Switzerland, but as well Europe, and that's as well what I bring to the table at Splint Invest as a platform. We always need to make sure that we work only with the best partners, that we only ensure to bring the best products onto the platform, and it's basically as well now even having the title Head of Investments, I'm still kind of the auditor and ensuring that we kind of really bring good assets to the platform.
Okay, interesting. So you saw the in and out of financial markets, of financial products within Switzerland and also internationally, and you realized that something was lacking. Now, how exactly did this go? What was the process? What did you realize?
Yeah, I'm a passionate investor, kind of private, so I did a bank apprenticeship, and with that I started to trade my first stocks before I was even 18, with my parents signing it. And back then it was not only about stocks, it was as well about bonds, having bonds in the portfolio. They taught me back then, you cannot only have stocks that's risky or higher risk, you as well need to have bonds that's kind of more stable in price development. And so I think it started after 99 somewhere, or 2002 especially, when the market started to crash back then, where portfolios mainly started to exist based on stocks, and kind of the bonds were not really anymore too big of a topic, because it started with the low interest rate phase, which we covered now for such a long time. And so especially after the COVID time, and sorry for going back a bit in the past, but after the COVID time, I again started to invest more into stocks, and was always talking about that with my co-founders, who were as well colleagues at PwC, and they basically experienced the same, like with this unpredictable market behavior after COVID. So at the beginning the markets were super low, you were able to invest, it was kind of recovering within no time, then it started to drop again. And so we were saying, look, like we are missing this stable asset class, which is kind of not necessarily or kind of with a low correlation running to the stock markets, which we can easily add to the portfolio. And this is how we started to do research. So this is how we kind of wanted to find the new asset category which has a low correlation to the stock market, and which is kind of having a more stable price development. And this is how we stumbled across first for whiskey casks. And we decided to purchase ourselves 6 casks of Irish whiskey, which was a huge process of doing that. So you first need to, after you know that this is kind of an investment you would like to have, that was criteria 1, so doing that research on the sub-asset category sector, and then kind of finding the partner who has the knowledge to offer you the right casks you really want to buy. And if you didn't have the partner, it's all about trust. You need to make sure that the casks are insured. You need to make sure that they're well properly stored. So obviously you don't want to take them back home and store them in your garage. I mean, you want to have them somewhere in a bonded warehouse. And so all of this was a lot of work for us to do that. But we were super convinced that this is the one of the best things to do to bring some correlation or to reduce the risks within our portfolios by adding such a product to that. Despite knowing that even that was kind of a piece of a portfolio, right? It's kind of I wouldn't remember when I've added like a single stock that size to my portfolio.
So interesting. So bonds were not an option anymore because of the zero interest rate environment, and then you're looking for alternatives with your colleagues, also your co-founders now, and then you stumble upon whiskey casks. So you buy some of them, and then how did you even get to the idea of Splint Invest? What was the chain of thought there?
Yeah, we've somehow figured out that we are not the only crazy people who kind of want to have that in the portfolio. So we obviously were very convinced about what we do and why we are purchasing our casks for our portfolios. And we started to talk about that with our former working colleagues, with our friends at home, with our family. And whenever we explained them why we do that, they said, hey, you know, like that sounds so good. I would like to be part of that. Can I join? And so suddenly we realized there are like quite some people already very close to us who are interested in as well having a stake in that. Of course, not like doing the full investment on their own, but like having a stake of that. This is how we then thought about why don't we make like alternative assets accessible to the wider audience, so to all retail investors within Switzerland or within Europe. And that's how the idea about developing the app and fractionalizing such assets and really kind of operating as a platform, where this was created.
Okay, interesting. But I mean, I see the point there, but I don't think I completely get it just now. So you bought some whiskey casks with your friends, and then you said some people you knew were also interested in that. And then but why don't the people just buy the whiskey casks themselves? Why do we need Splint Invest for that? If you did it, everyone else probably could do it.
It's a very good question. And I mean, as soon as you start to do your research and you know, like, you know that stocks is a very established type of investment, which kind of wherever you go, whenever you go to the stock market, you know, you get like what you get basically. So it's a paper which is somehow electronically booked to your portfolio and so on, and you've rights associated with that. With a cask, it's kind of an unknown world. That's one thing, and then it's like the entry size. So the first pallet of whiskey which we bought, and we invested like 40K, which is, again, like it's like I wouldn't remember having such a huge single stock sitting somewhere in my portfolio. I would be afraid of the risk of having kind of this piece in it. So it's kind of the really bringing 40K to the table for one investment, because then you're invested only in one casks from the same year, from the same distillery. You're not diversified amongst distilleries, amongst vintages, and just like one bloody damn cask or a couple of casks, but from the same year. And that's like one thing, there is no diversification within this subcategory, but there is as well no diversification into other subcategories within the alternative assets, right? So you just have like one asset sitting there. And that's not what you basically want. And at the same time, the other thing is it takes a lot of knowledge. So all the work which we did about researching if this is a valid asset category to go into, to identify the partners with whom you want to collaborate. So kind of as well doing due diligence there on seeing, hey, are those guys really able to pull it off? What is their track record? And you need to have the trusted partner, finding that quite some work, finding the insurance partner, finding the storage. It's so time consuming. It's not just like opening your the Shiro application and purchasing a stock within 5 minutes.
Interesting. So it's not really about making it possible, but making it a lot easier because of like 3 factors you said. So you said the ticket size is really big in those markets. As we said, whiskey cask is gonna set you back around 20K at least. Then you would like to diversify into other classes as well. You have kind of the storage component also, because where is the whiskey cask going to go? Probably not into your garage. And then also the specific know-how, knowing the markets, which is not that straightforward. Okay, I see the point why you would come up with the idea of Splint Invest. But now maybe let's walk the audience through how the app works. How can one invest through the app? What's the process there?
Sure. Very good question. It's like when we developed the app, so our team, our product team is highly focusing on the user experience, and I hope that all users out there see it the same way. It should be really as intuitive as possible. So you basically download the app, you open your account, the account is for free, so you don't pay for that. You already see the investment opportunities which are available at the moment for investing. You open that one, and at the beginning you get some key facts. Some people, they already start to decide on if they want to invest or not based on some key facts. And for all the others, we have like way more detailed information below. So we build up different categories about how this investment could develop. So we build up like a more optimistic scenario, a balanced scenario, a more pessimistic scenario, on how the price development could look like. So it's kind of really, it opens up a huge funnel of data within the app, which we provide the users. We as well create fact sheets where you get more information. You can as well like print it out if you want to. You can read it on your desktop, however you prefer it. And whenever you're convinced about investing, it just like simply takes you to click on the button. You select the numbers of fractions. So let's say we have a watch for 20K, we put that on the app, and then we fractionalize that in tokens of 50 euros. So that means you would have 400 tokens out there. So we call them splints. And then you can select how many of those splints you would like to purchase. Let's say you decide to go for 5, so for 250. And you basically have the option to pay with your credit card. That's one thing. Or you can transfer money via bank wire. So those are the 2 different options. We have as well a dashboard in there. On a monthly basis, we do the revaluation of the assets. We have as well a trading place in there to create liquidity for users who kind of need to exit before the forecasted investment horizon of the asset.
Okay, cool. So the idea of the app is basically to make it as easy as possible to invest into alternative assets using Splint Invest. Now, that sounds good, but right now we've talked a lot about like whiskey casks, and you've briefly hinted that there's watches in the app too. What other asset classes are there? What can the user expect?
So at the moment, what we do have is whiskey casks. We have whiskey bottles, and yes, sorry for talking a lot about casks. It's kind of how the journey developed. So we usually always start there. And we have as well wine. Within wine, we do have kind of wine around the world. So we go from Italy to USA. We have as well, of course, the great Bordeaux and Burgund wines, and of course, as well champagne. Then watches, like that's as well a big thing. And watches was very much powering last year. So you see as well how people are really seeking as well for watch investments. On top of that, we started with art. So we're working together with Maddox Gallery in London, and through there we can really like basically source blue chip arts and bring that to the platform, which is super interesting. We opened up as well handbags. So handbags had like crazy historical returns since like 35 years nearly, especially when you look at Bergen bags. It's incredible price development, and so all of them they differentiate a bit slightly in the mechanism. So whiskey casks, kind of intrinsic value creation. Basically, then we have like watches where it's more like supply and demand. So there's not enough supply to cover all the demand for the watches, and they cannot just like curb up, like Patek as well doesn't want to curb up production like hell. And same is like for Hermes when it comes to the Birkin bags. So they keep that production level at a low limit for on purpose as well. And when we looked in at champagne, wine, that has like again the intrinsic value creation in the bottle at the same time coupled as well with the consumption, and looking at that market, super interesting category, because it's not only that it's an intrinsic value creation in the bottle, it's not that the bottles are consumed regularly. It's as well like the climatic conditions which we see out there nowadays. So when you think about the bushfires in California, like it destroyed complete vintages out there, which means like the supply is even lower, but the demand is still higher, because there are always like more rich people within this world who have the money to consume and want to consume that. And the same we see as well in France when we look at the Champagne region, where the production volume cannot be curbed up to a limit what the demand actually is seeking for. So super interesting categories, and maybe we can as well look at the graph and see a bit how the categories performed. So and especially like on the correlation which we see compared to gold and stock market. So we maybe start with the dotted line. We see like black is gold, the development of the gold price since 2017 up to 2023. And the blue dotted one is the S&P 500. Then we have the blue line, which represents wine from acres.com, and whiskey, that's from the Rare Whiskey 101, the Apex 1000 index, and watches from Watch Charts, the price development of that index. And maybe we start with the stock market, and then we see like in 2020 the huge drop in the market. So that was obviously when COVID hit us. And then we see as well in 2022 again how like the huge volatility with the quite significant drops all the time again, which we see with the Ukraine war and the current inflation and recession scenarios which you're having. And if we compare them like what the whiskey prices were doing exactly 2020 when the stock market crashed, or what it did in 2022 when the Ukraine war was there, and this is like where we see this correlation, what I was referring to at the very beginning. So those prices they keep stable or even increase during those times, and this is why they're like awesome assets to add to your portfolio to kind of reduce your overall portfolio risk.
So to summarize for the people listening, the interesting thing about this graph is not especially like the value development, which is nice, of course, it looks good, but the really important takeaway here is that we see that low correlation, especially in situation of market and stock downturns, as you said in 2022. So that's really where those asset classes shine and where it gets interesting. So nice point and nice chart here. So now if we think about the retail investor, which probably has some stocks, some ETFs, maybe real estate, some small house himself, how would one venture into those markets? Should he now sell the whole stocks he has, the house he has, and basically put it all into those alternative investments, or how should we go about this?
Yeah, it's a very important point. There's like this phrase out there: don't put all your eggs into one basket, right? And that's very important when it comes to your individual portfolio. So you should have a wide coverage of asset, basically, because every category and then every product within this category has different associated risks, has different correlation, and the more diversified you are, the better or the lower is kind of your portfolio risk, and the more stable your portfolio will as well behave in more turmoil times like the ones which we have now. So no, don't put everything into those products. That's for sure. You see as well, like people who invested everything in watches, like they were super happy since 2017. The match was like went up to over 250, but then suddenly there is again, like after this huge increase, there is again a correction in the market, and that happens as well with those products. So it's really, the message is spread as wide as possible through all asset categories. And it's as well, this should not be the majority of your portfolio. I mean, the ultra high net worth individuals, they're doing that since years. They just like purchasing directly the blue chip art and hanging that in the living rooms, or having the all-time Ferrari directly in the garage. So they have like around 5 to 15 up to 20% of their portfolio is invested in such alternative assets, so in the physical alternative assets, and the rest is still in real estate, is invested in hedge funds, private equity, and in traditional funds. So they really have like a wide range of diversity. And so I would really say like 5 to 20% of your portfolio in physical assets. That's probably the direction you should go, but not everything.
Okay. Really good points. So we use those asset classes to really diversify the portfolios of retail investors. Very good point. Now we've talked about a lot about what's really already on the platform. So we have the whiskey casks, we have the bottles, we have the wine, we also have other things on there. Now maybe can you give the audience some hints on what is going to come onto the platform in the future? What can the users and the investors expect?
Happy to do that, and we're as well very excited about that. It's always super interesting in opening up new markets. That's point A. It's not always that trivial to go into that. We are at the moment, we know we will bring that pretty soon, is classic cars. So that's one category which as well our users all provide us feedback. Hey, we would love to see classic cars in the platform, but there we're talking a lot about ticket size, about the kind of the shape of the car, like what condition the car is currently in, and to really assess that and be sure that you really get the right car. So it's not just like buying a bottle of whiskey or a bottle of wine. So there's more behind. We are as well looking at crazy categories like horse breeding. We're looking at cigars. We're looking at yachts. So we're really like covering a full range, and there will more to come on the physical asset side. But we're not only looking at that. So what we know is that the retail investors which we are serving, they have as well a need for private equity investments. So kind of the financial product. That this is what we as well have on our roadmap, to bring private equity onto the platform, so that people can invest in either private equity stakes or as well into venture capital vehicles.
Excited to see that on the platform. Now, you've mentioned a lot of stuff, also some more exotic asset classes. Now, you said you were an auditor, and I imagine, or you said you have some experience with financial products, but you can't be an expert on horse breeding, on classic cars, on whiskey bottles and whatnot. So how do you manage to really make sure that only the highest quality products make it onto the platform? Because we discussed like ETFs, we discussed the S&P 500. Here we're talking about a diversified investment into like the whole S&P or the S&P 500. On the other hand, what we are doing here at Splint Invest is basically stock picking. So we're choosing one single asset. How can you make sure that this is really the right asset to pick?
It starts way before the asset. We first look at the categories. Before we decide to go into a particular category, we want to see historical returns. We make our own prediction about kind of what is speaking to invest into that asset category for the future. And as soon as we know, yes, that's a market which has potential for the future and not only was interesting in the past, it's the moment where we know, okay, we want to open that up. Then we basically start with a long list of experts within that field and kind of start to screen them and put together a short list of partners where we think there is a match. So we always want to have partners on the platform which have a significant standing as well within the sub-industry for knowledge and especially about investment knowledge. So it shouldn't be just like a company who just opened yesterday. So except of course they have like people in with huge track records, but otherwise they should really be like known for years of experience in that field. And so then it's about seeing if we have a match in the collaboration. That means they go as well through a due diligence check. So we want to know how the company is set up. So who is standing behind, like who's in the board. We want as well know where the company as such is domiciled, and we as well want to speak to their customers. So we want to know how happy they are. We want to see if they publish articles in newspapers around this topic. So if they're as well renowned for kind of knowledge management in the public about investing in this particular subcategory, and only if you are convinced that they can really deliver the best products, this is when we allow them to come to the platform, to join the platform network. And from that moment on, they can start to make suggestions about investment opportunities. So they can, for example, kind of send us a whiskey bottle investment opportunity, and then we basically do again like a due diligence test or due diligence check on this particular bottle, meaning we first of all want to check if the market price is fair, so the price which we pay for the bottle, that this is as well the current market price. We want as well see if the existence is given of the asset. We want to see if or how the bottle is insured and how the bottle as well is stored, and with that not only if it's safely stored but as well or if it's insured but as well the associated costs, because it's always important with those products you have like higher maintenance costs which are impacting the investment case, and those costs should never hurt the investment case too much. So it should always be at highest quality but at reasonable cost. So that's the important point about that. And only then we bring the asset to the platform. I hope this answered the question.
So there's a really long process involved for potential suppliers to get onto the platform and really offer assets, and it sounds like there's lots of check marks that need to be made. I assume your experience as an auditor comes in handy here. So interesting. Definitely sounds like you're doing the most to really ensure trust of the investors, of the users into Splint Invest, and also into the firm, into the assets, and into the suppliers.
Yeah, of course. Like you never know, right? So you never have the 100% guarantee, but we try to really mitigate all the risks which we see. And of course, there might be blind spots, things which we do not know. But whatever we can is what we as well do to kind of reduce as well here the risks before we bring someone onto the platform. And so far it worked out super well. I think we have outstanding relationships with the experts, despite I remember at the very beginning they didn't like us too much because we were probably the first clients who really came and started to challenge them on so many different aspects. But by now we really have like outstanding relationships as well with them.
Yeah, I quite fondly remember that time when we first onboarded suppliers and started asking the like inconvenient questions. But I think it's important for the users, but it's also important for the users to keep in mind that at the end of the day, they're buying into an investment, into a financial product, so there's some risk involved with that. But we at Splint Invest try to mitigate the risks as much as possible.
Exactly. Yeah, I of course would as well be interested in knowing like how you see Splint Invest. So I mean, you were not from the first minute onboarded onto the project, but at the very early stage the idea got pitched to you, and I would as well be interested to see how you saw this development of the original idea which we once shared with you.
It's a good point. So I as you know was onboarded, or I came to Splint Invest through Aurelio Peruca, our CEO, which I've known for a long time. And when he first pitched me the idea, when I knew about the concept or learned about the concept, couple points clicked for me. So I had always been interested in watches. I just liked the mechanical part of it. I liked the look, of course, and I also knew that some of them could make really interesting investments, such as the popular Rolex models, the popular Audemars Piguet models, and that I was thinking about investing myself, but of course we're talking about a minimum ticket size of maybe 20-30K, and then once you buy the watch, you should probably store it somewhere for 3, 4, 5 or even more years, not wear it. And when you buy a beautiful watch, you most of the time you want to wear it, you want to show it, you want to have it on your wrist. But of course, bad conditions and damages to the watch will lower the price, so you would have to store it in a vault somewhere. And then that's where really Splint Invest solved so many problems for me. And I think this is the most important component of a startup. You should solve someone's problems, and for me Splint Invest solves that problem of making those assets or those investments available to retail investors. It solves it really well in a really smooth and frictionless way, and that's why I was convinced that I think the first minute when Aurelio pitched to me here, I was like, oh, this makes total sense, and I see why people would need this.
Yeah, I still remember when you joined the first working session and convinced us about the watch investments. So that was really great.
Yeah, that was a good time.
Interesting and very cool to have you on the team for already such a long time.
Yeah, we're having a great time. So thanks for the time. I think we can wrap it up here. It was really interesting talking to you and also showing the audience how we do stuff, give some more insights. And thank you for the time, and see you soon.
Thank you, Lars.
If you like this conversation, you can download our app, visit our website splintinvest.com, follow us on social media, or subscribe to our newsletter where you'll be informed about the newest podcast episode. Thank you for this, and until next time.